recording.
Hi, Alvin Brown again, Alvin Brown and Associates. This time I'm going to give you a little update on some of the more recent developments with regard to offers and compromise. The date is, what is today? The 30th? It is the 30th, April 30th, 2011. And I think I'll give you some updates as we go along in some of the succeeding months. But the Treasury for the administration has proposed under the next tax act that the IRS eliminate the 20% deposit for offers and compromise. That's awfully good news, because I think that's something that everybody has been in favor of. A lot of people don't have the 20%, and at this particular time, they might have it a year from now when the offer and compromise is completed, but they don't have it now. Everybody has felt that this has kept a lot of people from filing offers and compromise, and the IRS has done some sneaky things to try and return an offer, keep the deposit, and there's been some kind of game going on once in a while with regard to those deposits. But the good news, I mean, I think that's very good news. It'll save people the 20%, and you would pay it at the end. You still have to pay the settlement amount, but it won't be the 20% first. The other thing that I think is kind of important is the fact that the IRS has, supposedly, they have a new policy for determining what your income is for yourself and your business. In this economy, income has fluctuated. There are a lot of people who are unemployed. So what's their income for offer and compromise purposes when you're not employed? And if a business is doing badly now, then what is the pro forma income that should be used for an offer and compromise? Well, the general thought was by the IRS and the Commissioner, and I presume Treasury, is that the most important element of your income is your present income. So if somebody is unemployed and it's not likely that you could get employed for a while, the IRS can literally consider zero as your income. And so those people should easily qualify. In practice, the IRS they've uploaded that policy to their Internal Revenue Manual, and it's there. And although the policy is clear, the manual says that that's the general rule. At the general rule, your current income is what it is, and you can use the current income. But they say that in most circumstances where it fluctuates, you can still average. I've had many arguments with the IRS over this distortion of the tax policy, because I think what it means is that you can take into account the personal circumstances of an individual or business, and that's in the IRM, that the IRS is required to take into account, the prospects of improving your business and the prospects for getting a job. So that's the trump card. As an advocacy issue, it's been a major issue for me, and I've won some, and we've compromised on some others. But before it was inserted into the IRM, the tax policy by the Commissioner was absolutely clear that because of the economy, the IRS is required to take into account, or should take into account, the current level of income of an individual or a business taxpayer. So the implementation of that policy in the IRM is not as good as it is in the broad statements made by the Commissioner in a prior news release. And also, that news release also indicated that the IRS will be much more flexible at this time in offers and compromise. So there's still strong IRS policy in favor of offers and compromise. That's just kind of a general feeling. I mean, that's an important development in terms of how they focus on current income. And if you have any questions about that, you can always call my office. There's no charge for, a 15-minute consultation. I'd be happy to talk to anyone who's watching this video. And you can reach me at 888-712-7690, and my extension is 111.